Before I had a name. Washed before I knew my shame. Oh, the Lamb was slain. Some price he paid. I owe it all to Jesus, all, every part of me, lying at his feet. I owe it all, that every breath I take, rise to bring and praise to the glory of one day. Jesus. Oh, Jesus. His hands are holding mine. A crown of thorns has freed my mind. Sin cannot exhaust. Grace shown on that to Jesus, every heart, like his feet. Every breath I take, my dear,
Welcome everyone. We're going to get started in a few minutes. Welcome. Hope everyone is doing great. Hope you all had a great week, and I hope you are having a good weekend as well. So we're going to get started in a few minutes. Just stay tuned. Thanks for joining in as well. All right, all right. Good evening, good afternoon, good morning from wherever you're joining in from. Hope everyone is doing great. Okay. I hope you guys can hear me. Hope everyone can hear me. Let me know in the chat if you can hear me loud and clear. Okay, that's good. That's good. That's great. All right. That's good. Welcome, welcome, welcome. I'm so glad to have you all on this call this afternoon. I'm going to stop sharing my screen and turn on my video. Hi, everyone. Hi. It's your girl, Eva ChartNationFX on Instagram, TikTok, YouTube, ChartNationFX over here. Welcome, welcome everyone. I'm super excited to be having another edition of our monthly free masterclass, okay? Because we are leveling up our money this year. We're leveling up our money this year with our trading skills, okay? So this is the hub for you to learn more about trading and get your skills up, okay? All right, so let me know in the chat where you are joining in from. Let me know where you're joining in from. And also, feel free to share the link with your loved ones, with anyone you know that you can that can benefit from this session. Okay. Okay, so in our chat here, we have people joining in from all over the world. I can see people joining from Canada, Nigeria, South Korea. Okay, that's cool. Morocco, that's good. Ghana, that's good. That's good. Welcome, welcome, welcome. I'm super excited. US, that's good. That's good. I'm super excited to see that you guys are getting your money up this year with ChartNationFX. Okay, US, that's nice. That's nice. Welcome, welcome. Keep typing in the chat where you're joining in from. Let me see. Oh, on our YouTube, we have people joining from Toronto, Ghana. Hi, Pearl. From Houston, Barbados. Okay, Barbados. Wow, Scotland. All right, that's impressive. Scotland. Okay, Barbados. I'd like to visit Barbados someday soon. Houston, nice. That's good. Welcome, welcome. That's great. I'm super, super happy and excited to be doing this. It's so fun for me. Okay. So we're gonna get started. We're gonna get into the deets in a few minutes. Someone said my audio is low. Let me know if you can hear me properly. Okay, so we're gonna get into the details in a few minutes, but I just want to have an understanding of the people that's on this call right now. Can you tell me if you are a trader, like if you're a beginner? Okay, thanks for letting me know my audio is fine. Okay, that's good. Can you let me know if you're a beginner, if you're advanced, intermediate, day trader, or if you're just like brand new to the skill set and you're trying to get the knowledge that you need to elevate yourself? So let me know in the chat what level you're in the day trading field. So let me know. Okay, we have some intermediates, beginners. Okay, intermediates. All right. New, okay, that's good. That's good. Because today we're going to be discussing about technical analysis, and we're going to be looking through the charts from basics to the advanced, okay? We're going to discuss technical analysis and how you can simplify your trading with precision, right? So I just want to understand the level that people are in. So we're going to definitely start from the basics and then get into the advanced part of day trading. All right. All right, we have more people joining in. As you join in, just let me know. Let me know where you're joining in from. Let me know where you're joining in from in the chat. Drop your country, your state, province, or city in the chat. Okay, over 6 years of experience. That's good. That's good. We have someone from Georgia in the US, I believe. Welcome, welcome. Welcome. Okay, in our YouTube chat, we can see here we have some beginners, intermediates as well. Okay, that's good. That's good. Okay. All right, so we're just going to get started right now. We're going to get started, go straight into the information that we have for today, okay? So like I said, today we're going to be diving deep into the charts, right? In our last masterclass that we had on the 23rd or 24th of February, I believe, we had a free masterclass to lay the foundation knowledge that's required, okay? And in that masterclass, we basically went over the basics meaning what is day trading, what is Forex, what do we trade, how and when, the levels of trading, you know, the basics and everything that you need, and also the pre-psychology. And we also discuss a little bit about technicals and some risk management foundation. So if you did not attend a masterclass, you can actually watch it on our YouTube channel, ChartNationFX. After this masterclass, you can check out our YouTube channel, ChartNationFX. The recording of this masterclass we're hosting right now will be on our YouTube channel as well. So when you go on there, please like, share, subscribe, and all the nitty-gritty. So in our first masterclass, we established that as a day trader, by the way, this call is going to be recorded on Zoom as well, in case you didn't know. Okay, so we established that as a day trader, you need to be resilient, right? Because it's a fairly simple concept to buy and sell at the right time. But because charts are fairly a new area for most of us, it tends to be hard, right? But the question is, why are some people making money? Some people are not making money, you know, and there's multiple reasons why that is. However, if you follow the right proper knowledge or guidance, you will be successful, and that is a fact, right? Now, in the previous masterclass, we also established the fact that technical analysis is one of the most important areas of day trading, right? Because that's how you can analyze price and actually enter and exit your position. Okay, so on our agenda for today, we're going to be discussing two main things on the technical analysis. We're going to be discussing about market structure. So we'll talk about how to identify trends and also trends within trends, right? Because when people say, you know, we're going up, we're going down, the market is bullish, the market is bearish. Literally on all time frames, there's trends happening all the time there's a trend happening on all time frames, and it can be confusing sometimes, right? So we're going to be diving deep into understanding how to decipher all those time frames and all the trends happening on all of those time frames, right? And after we do that, we'll also talk about the types of trends that we have and types of market conditions, and then we'll move into zones. So we're going to talk about support and resistance. Support and resistance is really underrated in this field, right? People think that support and resistance is so basic and you don't need it, but let me tell you, there's people making loads of money off of only support and resistance. So do not neglect the basics, right? That's very important. Make sure you do not neglect the basics. Okay, so let's get right into it. I'm going to share my screen again, and we're going to be doing lots and lots of drawing on our trading view charts. Okay, so if you see me looking this way, I will be looking over this way. That's where my screen is. I'm going to be sharing, so just so you know. Okay. If you have any questions, you can also drop the questions in the chat, and I'll be answering those questions as we go along in this session today. Okay, so I believe my screen is shared, but type a 1 in the chat if you can see my screen, please. Let me know in the chat if you can see my screen. Okay, that's good, that's good. I see all the ones moving, so everyone can see my screen, that's good. All right, so technical analysis, a very, very beautiful concept. In my opinion, I think technical analysis is art. It's literally art, right? I see technical analysis as art. So yeah, so let's dive deep into it. So when the market moves, the market moves in waves, right? The market does not just fly up, fly down, or move sideways forever. The market moves in waves. So sometimes the market could be in an uptrend, sometimes it could be in a downtrend, sometimes it could be in a range, or we could have a choppy market, right? So those are the four main types of trends that we have. So I'm just going to draw them out here to give you some visual. So when we have the market going up like this, it doesn't just like keep going up and up and up, right? The market moves in waves, meaning if it's in an uptrend, it's going to go like this, up, down, up, down, up, down. And of course, understand that sometimes it's not going to be so pretty and well structured. Sometimes the market can do some very, very funny things, but it's just for you to understand where we're going and stuff like that. Okay, so this right here is called an uptrend. Okay, so this is called an uptrend. Let me take this away. And then we have a downtrend, which is basically vice versa of an uptrend. So when the market is going down, we're making waves to the downside. So we go down and up and down and up and down and up and down and up. So that's how the market would look, right? So we're going to tag this as our down. Now, there are times when the market is just not trending. And situations like that, you would see that the market is kind of ranging in a box. It's just moving within a box. So that would be called a ranging market. Now, this right here, you may think is so basic, but let me tell you, this right here basically indicates the type of market conditions. And if you notice, as the year goes along, you notice that the market condition kind of changes, or the momentum volume changes on the different time frames, and you wonder why. If you understand the basics, you'll be able to understand that, okay, look, we are no longer in an uptrend, we're now switching from up to down. You know, the market is kind of ranging so that we can change direction and all of that, right? So this is very, very important to understand. Okay, so after the ranging market, we have a choppy market. So a choppy market is a market that does not have a clear top or bottom. It does not have a clear trend, nothing. It's just like doing, you know, whatever it likes, right? And whenever the market does something like this, you have to stay away. I'm going to label this as choppy. Okay, and I'm going to also say stay out. Okay, so these are the main types of trends that we have, okay? We have the uptrend, we have the downtrend, we have the ranging markets, and we have the choppy market. When market is choppy, when you cannot identify a trend or a clear top or bottom, you just stay out of the market until you can identify a clear direction in the markets, okay? So now, if you look at this diagram here with our uptrend, you will notice that the market is moving up and down, up and down, up and down, right? When you have something like this, when you have a market going up, we call it higher highs and higher lows, right? So I'm going to reduce this. Okay, so this right here, we have what we call higher highs and higher lows in the markets when we have an uptrend. Higher highs and higher lows, right? Very important to note. Higher highs, higher lows for uptrends. Okay. So that's how we identify uptrends. Uptrends are made of higher highs and higher lows. And there's a clear understanding of why they're called higher highs and higher lows, right? So it just means that even though the market is going up and we are not like going up in a straight line, the market is still maintaining structure. It's still maintaining our swing highs and swing low points. So here we have our high, low, then we have a higher high. This high is higher than the previous high. And this low is higher than the previous low, right? So that's basically the meaning of higher highs and higher lows. Now we have vice versa for the downtrend scenario. So for downtrends, we have lower highs and lower lows. So we have here a low. And then we have, a high, and then we have a low. High down here. We have here a high and a low. Now, after that, we have a lower low, because this low is going to be lower than the previous low. And then this high is lower than the previous high, right? So that's the concept of lower highs and lower lows. So let's label that lower highs and lower lows. Okay, we're going to go with the abbreviation because, yeah. So lower highs, lower lows, lower highs, lower lows. Okay. So if you understand this concept so far, please type a 1 in the chat. If you understand this concept so far, the concept of the market trends. So when we're in an uptrend, we're going up, we're going to be creating higher highs and higher lows, okay? When we are in a downtrend, we're going to be creating lower highs and lower lows. If you understand this concept so far, you can feel free to type a 1 in the chat. All right, I see a few ones. Okay, so let's keep going. Let's keep going. Okay, so now in addition to understanding the higher highs and higher lows concept, we also need to understand that when the market is moving, we're going to be making lots of impulses and retracements, right? Impulse and retracement, impulse and retracements. Okay. So when the market is moving in the direction of the main trend, it's called an impulse, okay? Then when the market is going down to create the higher low, it's going to be called a retracement, okay? So this right here is called the impulse. Oops. So this right here is called the impulse because it is in the direction of the trend. Then this right here is called the impulse because it's in the direction of the trend. Same with this impulse and this impulse and this impulse. Then when the market is going in the opposite way of the trend, it's called a retracement. Okay, so when the market is going opposite direction of the trend, it's called a retracement. So we have this retracement, 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 retracement. Same with the downtrend, but vice versa. Okay, so with the downtrend, when the market is going down, when it's creating waves to the downside, it's called the impulse. However, when it's going in the opposite direction of the main trend, it's called a retracement, right? Okay. Then when we have a range, the market is just moving sideways, and a choppy market, remember, when the market is choppy, you can identify a clear top or bottom, a clear trend, you just stay out, okay? You may think that market will not move again, but that's not true. You just need to stay out and wait and be patient for your setup to come to you. Okay, now we have laid the foundation of the base. This is literally the basics, the foundation knowledge of technical analysis, right? However, this impulse and retracement, that literally happens on every single time frame. This is the part that they don't tell you. Every single time frame has a higher high, higher low, has its own trend, has its own behavior. Yeah, every time frame is literally going to be forming higher highs and higher lows, higher highs and higher lows, lower highs and lower lows all the time. The question is, what do you do when you're in that scenario? That's the question, right? Okay, so now I'm going to introduce to you the concept of the trends on the different time frames, okay? So we have what is called the long-term trend. That's number one. Then we have the medium-term trend. That's number two. And then we have the short-term trend. This is very important for you to know, okay? So each of the time frames, again, has higher highs and higher lows. If you decide that you're going to trade all the time frames all together and just like try to catch higher highs and higher lows, you're going to completely confuse yourself and you're going to be stressed out, okay? So now let's look into this. And I hope you're taking notes because note takers are the real money makers, okay? So please take notes. Okay, so long-term trend. The long-term trend would be the trend of the weekly and the daily time frame. So please write this down. The weekly and daily time frames. So any pair that you're trading, you have to be able to identify the trend on the weekly and the daily time frame, okay? Now, the medium-term trend, is that correct? Yep. The medium-term trend is the trend on the 4-hour and 1-hour time frame. This is very, very important for you to know, okay? 4-hour and 1-hour time frame trends are called the medium time frame, are called the medium-term trends, okay? Then the short-term trends would be the trend we find on time frames like the 15 and 5 minutes. 15 minutes and 5 minutes. Okay. I'm going to put this right here and explain it again. When we have market structure on all time frames. So we have higher highs and higher lows forming on all time frames from the monthly to the weekly, daily, 4-hour, 1-hour, 2-hour, name it, right? But if you're going to just be free and trade all the time frames and all the structures, you're going to confuse yourself and you're going to blow your account, okay? So then you need to understand that each of the time frames, you need to be able to identify that, okay, this is the long-term trend, this is the short-term trend, this is kind of the medium-term trend. So you need to be aware of that when you are taking a trade. Okay. So now let's put this into perspective, right? Let's put this into perspective, and I'm going to be doing some more drawing over here. Okay. So to give you more of an explanation, I'll use the trend line to make things clear for you. Okay, so when you're on the daily time frame, about this quadrants, daily 4-hour. You need to be able to understand how to use these time frames to your advantage. Okay, so on the daily time frame, you can see that price is going up in an uptrend. So it's creating higher highs and higher lows. So let me quickly draw a trend line. So we have a high here and a low and a high on the daily time frame. So we see that price is doing something like this. We have the high, low, so we can see that price is in an uptrend on the daily time frame. However, on the 4-hour time frame, we are also still in an overall uptrend on the 4-hour time frame, okay? But would see more of a market structure on the 4-hour time frame. That's what happens. The 4-hour time frame would definitely respect the daily time frame. That's one thing to know. But on the 4-hour time frame, you would see more candles, more structure that's forming, right? So you can see something like this. You'll see something like this on the 4-hour time frame. Meanwhile, the daily is clearer, but the 4-hour time frame is looking, has more information. Then on the 15-minute time frame, you would see a whole lot more candles, a whole lot more structure forming, right? So you have something like this. Something like this on a 15-minute time frame, right? So if you notice here, everyone or all of the time frames are basically respecting the higher time frame. That's one thing you will notice. All the time frames respect the higher time frame, even if they decide to create their own structure. Okay, all time frames respect the higher time frame, even if they decide to create their own structure. That's one thing to note. Now, this is very important for you to understand because all of these movements on all the time frame, they provide multiple opportunities for you to get in and out of the market. They provide multiple opportunities for you to get in and out of the market, right? And once a trend has already been established, it is more likely to continue than it is to reverse or change. So meaning on the daily time frame, we'll see that the market is going up. Even if we have a retracement, we just need to wait for the next potential impulse, identify the next potential impulse. That is where market correlation and top-down analysis comes into play. Okay, this right here is called time frame correlation, and this is where the importance of top-down analysis comes into play. So if you go to the daily time frame, you see clearly we're creating higher highs and higher low structures. Then on the 4-hour time frame, overall price is respecting the concept of the higher highs and higher lows, even if it's creating more structure. So here we'll see that, okay, the 4-hour time frame can be in a clear uptrend on this aspect, right? But then later on, when it's creating the retracement that's supposed to be happening on the daily time frame, it can create a clear downtrend. As you can see over here, it can create a clear downtrend. And then again, when it's ready to start switching back to the main trend, which is the uptrend, it would reverse and then start to create the main uptrend, right? So same thing on the 15-minute time frame, same stuff happens, right? same stuff happens. So this is basically top-down analysis. This is basically time frame correlation. So far, type in 1 in the chat if you understand everything I've said so far. And let me know if you have any questions. If you have any questions, please put them in the chat so I can quickly answer them before we move on. Question says, would this video be available afterwards? Yeah, it will be available on our YouTube channel for you to watch and for you to share with anyone that you think would need it. So yeah. Okay, we have lots and lots of ones in the chat, so that is good. Okay, the question says, can you explain impulse again? Impulse is basically the movement in the main, in the direction of the main trend. So when we are in an uptrend and the market is printing bullish candles, that is called an impulse. Okay. You did not include the weekly time frame. Yeah, I did not include the weekly time frame because the weekly time frame is usually basically the same thing as the daily time frame. I also did not include the 1 hour time frame because it's almost the same thing as the 15-minute time frame, honestly. That's why I did not include it. This is how do you identify fake outs. Fake outs comes into play when you have identified your zones, which is what we're going to look into next. Okay. Also, what relationship is between weekly price movement and monthly market structure? So if you go to the monthly time frame, you would usually see a whole lot less candles, and it's going to be difficult for you to be trading on the monthly time frame because as a day trader, you're holding your trades for max a few days, right? So if you're going on the monthly time frame, you would not be able to see enough details for you to get in and out of positions. How do you identify fake outs in a trend? So we'll look at fake outs when we look at the support and resistance aspects. If a time frame does not align with each other, what do you do? That's a very good question. Because if you would, okay, we'll look at that then. If the time frames are not aligning, then you need to be aware that we are either in a retracement state, and you need to identify where your next potential impulse would start from. Okay. That's so, for example, the daily time frame can be in an uptrend. The daily time frame can be in a clear uptrend, right? However, for this impulse to happen, for this retracement to happen, that means the 4-hour time frame would be in a downtrend. So that means in that situation, the daily time frame would be in an uptrend, the 4-hour time frame would be in a downtrend. Now, when that happens, you need to be mindful of the candles that's being printed. What you do is on the daily time frame, you look left to see potential zones where price could react off of to continue going bullish. That's what you do. Yeah, that's basically what you do. Hope that answers your question. Can you use different strategies like SMC and price action? Okay, so when it comes to your trading strategy, the best thing to do is just follow price, which is price action. Now, there are many ways to follow price. Some people use SMC, ICT, and all of that. I personally don't use any of that. I use pure price action. I follow the trend and I use my candlestick analysis. And that is all you need. I don't like stress. I don't like too many lines on my chart. If my chart starts getting messy, I will literally delete every single thing and start from the very top, right? So personally, I don't use SMC. I trade pure price action, candlestick analysis, and that's it. That's really all you need, to be honest. But yeah. All right. So now let's look into more of time frame correlation, right? Yeah, so basically when the market is in an uptrend on the daily time frame, you need to be, your mindset should already know that, okay, lower time frames would respect that. The question is, where would it respect it from? That's where zones come into play, right? So does that mean you execute your trades on 4-hour or 1 hour? It depends on the type of trade. If it's going to be a trade that's gonna take long, maybe a swing trade or a longer intraday move, I could execute on the 1 hour. If I'm looking for a swing trade, I wait for a 4-hour confirmation and I get in, right? Okay, so moving on. So this is what you need for time frame correlation. So when you're doing your top-down analysis, you need to, if you need to put notes on your charts, that's good. Because personally, I have a checklist, right? When I analyze my charts, I have a checklist. And in my checklist, what I do is I basically type the daily time frame, 4-hour, 1 hour, and all of that. And I type in the current market structure that's printing. So I'll be bullish, bearish on each of the time frames. Then I wait for an area where price would potentially continue going in the direction of the daily time frame before I execute my trades. That's basically it. Okay, so that's basically what you need for time frame correlation. Now, there's one thing that happens a lot with traders. People tend to bring their personalities into trading, right? People tend to bring their personalities. Some people would like to be the first to start something, and it shows in their trading results, right? So I want you to understand that once a trend has been established on the daily time frame, it is more than likely to continue than reversing. Now, reversal does not mean retracement. Reversal means it would switch from uptrend to downtrend, right? So it is more than likely to continue bullish than to start going completely bearish. And never try to predict those reversals. I'm telling you, never attempt to predict reversals because that's just going to blow your account, okay? So don't do that. Allow the market to show you signs that it is about to start going bearish by printing bearish market structure. And this is what it would usually look like. Now, the market does not move in the same way all the time for all the pairs, right? The market moves differently. Reversals may look differently in different scenarios. So if you have a clear uptrend, market has been going up, 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 and all of that. Sometimes you could see something like an accumulation. So the price would start dancing in a zone for a long time. And then before you know it, it will just break structure and then switch to a downtrend. So this is an example of what a reversal would be. Until price has broken the structure of the uptrend, there is no need for you to start selling. Because again, remember, you don't need to start any trend, okay? You don't need to be the first person in the trend. Believe me, you're going to just eat up your money. So wait for price to clearly show you. And this is again on all of the time frames, okay? You just need to be able to align all those time frames. So for example, on the daily time frame, let's say we're on the daily time frame and the market is bullish. So we need to always keep in mind that, okay, the daily is bullish until the swing low point or until the higher low point has been broken. We are not going to be looking for main sell trades. We're going to be waiting for opportunities to continue to go long, right? Until again, this is what it would sometimes look like. Sometimes it could just be clear. Oops. Okay, so it would not be like that. It could be something like this. It will just keep going up, and then something like this. One structure would break, retest, and continue bearish, right? So again, until the swing low point over here is broken, we will not be selling. We will not be selling until we have structure broken, like we had the structure broken on this side. Same with this. We have this low point here. The market broke, retested, and continued to sell. That is all you need, right? In addition to that, this would happen on all time frames as well. This would happen on all time frames as well. So you can see something like this reversal type of pattern here or here on this 4-hour top, where the retracement on daily time frame wants to begin. Okay, I hope I'm making my point very, very clear. I hope it is clear to everyone. Okay, so let's keep going. Yeah, so once you have an established swing high and swing low points, until the impulse is completely violated, you will continue to follow the trend. Okay? Until the swing low point or swing high point is completely violated, you will continue to follow the trend. So let's say we are in an uptrend. This right here would be our swing low point. So if the market is doing something like this, if it's starting to retrace, until we see price go beyond this point, clearly with a nice candle, we are not going to be selling. Now, the next question would now probably on your mind is, can you now counter the trend? Can you counter the trend, or can you take counter trend trades? And the answer is yes, you can. Now, I do not advise this for beginners. If you're a beginner, just follow the trend on daily time frame. That's all you need. Follow the trend on the daily time frame if you're a beginner. However, if you have more experience, you are able to identify opportunities on lower time frames to get in and out of the market, that is completely okay, right? But you still, even if you're going to take the counter trend trade, you still have to be aware of the long-term trends. Remember the long-term trends, so trend on the weekly and the daily time frame. This is very important. And this is something that happened on indices this week. I will show you guys a real life example, right? This is something that happened on indices between the last 2 weeks. People started shorting the market, saying that indices would start to drop. Meanwhile, it was only finding a level of support on daily time frame to continue bullish. Okay, so this is why I'm trying to overemphasize this point. Okay, so yeah, so when it comes to counter trend, you can counter trend trade if you have the experience, but you just need to still be aware of the main trend and the areas of potential trend continuation. So that's where support and resistance, also supply and demand comes into play. So there are times when the daily, like we just mentioned, there are times when the daily time frame could be bullish, but the 4-hour time frame could be printing bearish market structure, right? You can take advantage of this again if you are experienced. I would emphasize this. If you are a beginner, just focus on the long-term trends. So remember, long-term trend is on the daily time frame, right? Or the weekly time frame. Okay. So now, let's see. So now that we have identified higher highs, higher lows, lower lows, that form on all of the time frame, that means that the market structure can be a bit confusing. So the question is, what is the best time frame to use? And the answer to that question is the higher the time frame, the better for you, right? The higher the time frame, the better for you. So meaning follow the trend on the higher time frames, and that gives you more of an edge and more of a momentum in the direction of your of the main trend. And this is the reason. So let's say again, the market has been going up, the market has been going up, the market has been going up. So we identified a higher high point. Now, as a trader, of course, you know that by now, after I gave you this information, the next thing is going to be a higher low point. The thing you do not know is where that higher low is going to stop and where the impulse will continue, right? Because there are times when the market can stop literally, a lot of times it can literally stop at anywhere. Now, if you're going to be shorting a bullish market, how do you know basically, how do you know that where the market is going to stop? Do you get what I'm saying? How do you know that the retracement is going to just continue, right? Because remember, the higher time frame has the momentum of bulls. So that means that the market can decide to continue at any point to go bullish. So this is why I'm basically very emphasizing this point, okay? I hope this is clear. So yeah, so does everyone understand the concept of market structure and trends? Because now we're going to dive into another concept. Does anyone have any questions? Have any inquiries? Any questions so far? No questions? Okay. Before we actually dive into the next concept, I would like to show you a live example. I would like to show you a live example, okay? This right here is GBP JPY on, okay, we have a question that says, does this work on crypto also? This works on everything that has a chart. That's the importance of this skill set. If you have a chart, you can decipher this information on all of the charts, okay? Do you implement tools like Fibonacci in your analysis of trends? You can, and I used to use Fibonacci up until last year. No, up until, the beginning of 2023. Because I like less stuff on my charts. I really don't need Fibonacci to show me anything. I can go off of the market structure personally. But yeah, I actually understand the concept of Fibonacci. I know everything about Fibonacci, but I just don't use it. Same with all those indicators, stochastics, MAs, all of them. I know all of them, but I don't use them because it's not necessary. All right, so this is GBP JPY on the daily time frame. Okay, so remember, a trend once established is more than likely to continue in its trend on than reverse. Okay, if you don't take anything out of today, just remember this. A trend that is already established is more likely to continue than reverse. Okay, so GBP/JPY is clearly bullish, clearly bullish. We have this impulse, retracement, impulse, and then we have this retracement. We have an impulse and a retracement that is happening right now. I'm actually waiting for a trade on this pair because I'm gonna make a lot of money, so I'm just being patient, okay? Yeah, so this is basically a clear indication of what an uptrend could be. So sometimes it's not pretty, but with patience, you would be able to understand that, okay, structure is still being respected, right? So we have high highs, high lows forming, and all of that. Now, again, if you focus on the long-term trend, you'll be able to identify good opportunities in the markets. So let's quickly go into the next concept, which is going to be zones, right? So the next thing after identifying your trend of the market, the next thing you need to do is identify your zones. That is where support and resistance, supply and demand comes into play. Okay. After you identify the trend of the market, if market is going up, the next question you should ask yourself is from where, right? Where is the market going up from, right? So that you can get into the trend. Okay, so this is where the zone comes into play. So we have support and resistance. We're going to talk about support and resistance for today. So okay, so yeah, for support and resistance, it's very important for you to identify a strong support and resistance zone in the market. And for you to identify a strong support and resistance zone in the market, you need two important things, okay? Because remember, the market structure is forming on all of the time frames. You cannot draw, if you draw support and resistance on your chart on all time frames, you will literally not even see anything because your chart will be filled up with lines, okay? So two things to note. One thing, the first one is the time frame of the zone, right? The time frame of the support and resistance that's forming. So for the time frame, the higher the time frame, again, the stronger the zone. That's the first thing. Now, the second thing to note is the number of touches. So the more the touches, the stronger the zone. Do you get what I'm saying? So two things again, the higher the time frame, the higher the zone. That's number one. And number two, the number of touches. So the more the touches, the stronger the zone. Okay. So let's go into the charts here. So support and resistance. Support means the floor of the market. Okay. And then the resistance means the ceiling of the market. So support. And it's basically, it's some people draw lines, some people draw zones, but it's not a line because drawing a line means they're saying the support is just one price. And it's not just one price, it's more of a zone than it is a line. But for the purpose of this, you know what? Let's just draw the zone instead. Let's just draw a zone. This is our support zone. Okay. So this is a level of support. Support basically means the floor of the the market, right? So the floor meaning that price keeps coming to that zone and rejecting it to go up. I hope that's clear. Price keeps coming down, bouncing it, coming down, bouncing off of it to buy off of it. That's basically what a support means. Resistance means the ceiling of the market. Let's write up here. Resistance. Resistance is the ceiling of the market. So that means that when price touches the ceiling, it basically falls off of it, right? So it will look something like this. Touch, fall, touch, fall, touch, fall. That's basically support and resistance. That's it, right? Okay. So I hope this is clear. We have a question in the chat. Please, do you incorporate supply and demand in your trading? Yes, supply and demand takes the cake, I'll tell you. Supply and demand helps me a lot, gives me excellent risk to reward trades. If you're looking for sniper entries, you better be using supply and demand, best believe. But yeah, I use supply and demand. And I also use support and resistance, okay? Okay, so support again is the floor, resistance is the ceiling. Okay. So now the question is, how do you, okay, let's actually look at the charts to see an example before we identify how we use support and resistance. Okay, so on the chart here, if you're looking for a level of support and resistance, you get your horizontal tool on TradingView, right? You start to basically to move it, to see, you move it slowly to see how many touches you will get in the zone. Okay? To see how many touches you'll get in the zone. So for example, we have moved our horizontal tool and we see 1, 2, 3, 4, 5 touches. And guess what? GJ made a brand new high off of that level of support, right? So two things to understand with support and resistance. Support and resistance, they are more like zones in the market. So when price reacts off of them, sometimes it could break, but then if it breaks, it could turn either to a level of support or resistance again. So this is an example here. Before all of this price action happened to the right over here, this level was a level of resistance. So price rejected it the first time, rejected it the second time, right? So when you see price doing something like this, you draw your line. Basically, you put your line there and just leave it there, right? Because price could potentially come into that zone later on. Now we see here, price actually danced around this zone again and rejected it and literally fell off of the zone, right? Finally, it was able to break and then it came back to it, used it as support and it bought off of it. It came back again, used it as support and bought off of it again, right? So this is why I tell people, like, this right here is a simple concept. Break and retest, support and resistance, following the main trade of the market, and you bank boatload of money. Right? So, yeah. So this is just an example of previous resistance turning into support. And this right here, it seems so simple, but this can give you very, very good risk to reward trades and high probability trades on high probability trades with good risk to reward, right? And high win rates, of course. Which time frame is this? This is the daily time frame on GBP JPY. Okay, so this is still daily time frame. We can see here, if we're still moving our tool, you keep moving your tool on, we can see here, we have a touch over here. Price broke out, came back and used that zone as level of support again to buy. It played around, finally broke, came back to retest and sold. It finally broke again, came back to retest and it bought, and basically, right? So whenever you see zones like this, especially on daily or weekly time frame, you better draw them out and leave them on your charts so that and have that in mind that is a very high probability zone. That's why I put mine in a red color. So here again, we can see price tapping this down here. This one is a little bit messy, but it will still work. We have a tap, 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 tap again, right? So it's literally all over the charts. Like these zones are all over the charts. But again, remember, the higher the time frame, the better. The higher the time frame, the better. Okay. Okay, let's check if we have any questions in the chart. Please, can you teach us the concept of supply and demand? I can, and I will actually. I'm thinking of handling that in our next masterclass. I don't want the classes to be too long. So yeah, I will teach supply and demand because that one is a bit more in-depth compared to support and resistance, right? So I will teach that in the next masterclass. How do you incorporate liquidity traps in your price action analysis? This is a good question. I personally incorporated this liquidity traps gives me high probability trades as well, but that depends on a few things. But we will not be able to cover that today, unfortunately. Okay. So far, does everyone understand the information so far? Type a 1 in the chat if you understand, and also type your questions in the chat as well. So essentially, what I'm trying to communicate here is first of all, follow the trend of the markets. Follow the trend of the market. The trend is your friend until it breaks. The trend is your friend until it breaks, okay? Follow the main trend, right? And identify your levels of support and resistance. You guys could have caught this move on the 12th of March on GJ and made a lot of money if you were using support and resistance, okay? Yeah, so it's pretty straightforward, straight to the point. I hope you guys understand this. Yeah, so let's actually look at more examples. So this is an uptrend. So let's see if GJ was ever in a downtrend. Okay, so we have a daily downtrend that's happened in 2017 when I was in uni. Okay, so on daily time frame here, we can see that GJ was actually in an uptrend, right? It was in an uptrend and then price broke. Let me show you daily uptrend. It kept going up, and then structure broke, retested, and went down. So let's look into details of how someone could have taken advantage of a move like this. And this is why I always scream backtest, backtest, backtest. Okay. We have a statement in the chat. Please, having this class once a week is too slow. Please, can we get at least two times a week, please? So we start trading too. It's actually once a month. And yeah, it's actually once a month. But I guess we can look into making it more often. Maybe if we start getting more traction on our social media pages and on the Zoom calls, we'll definitely increase the frequency. Okay. All right. So yeah, so we're looking at an example of when a downtrend happened on GJ. So we can see here, price continued in a bullish state of mind. And then it finally broke the structure at this point and retested here. And it also came back to retest this zone up here. So it's important to leave your zones on your chart, okay? Very, very important. Now, whenever I'm analyzing my charts and it's a bit confusing for me, I either switch to the line chart on TradingView or I draw out the structure and I move the drawing away and then I analyze it before coming back to the chart. That's a hack, okay? Draw out your structure using your, the path tool, take it out of the chart, look at it, and then before you come back into the chart itself, okay? So that's something you can do if you get confused. Okay, so over here with this, our drawing of GJ's previous market structure, we can see here that price was in an uptrend, creating higher highs and higher lows. and then structure broke. So this was the swing low point at the time, right? The swing low point and price broke the structure. And it did not only break this one, it went ahead to break this one as well. So that's why it's important to draw your support and resistance zones on your higher time frames, right? So we can see here that this was roughly a, remember it's a zone, it's not a line. You know what, I'm just going to draw a zone instead so that, so if we roughly draw the zone here, this is where we got a break of structure. Let me label that BOS. A very important abbreviation in your technical analysis. BOS meaning break of structure. This was our break of structure. And then it went ahead to break this structure as well. Okay. Oh, I said I was going to use a zone instead of okay, so then we've got another BOS here. Whenever you see a BOS, a break of structure, especially on daily time frame, the next thing you should wait for is a retest. Break of structure meaning that the structure is shifting from bullish to bearish. Okay, so after you see a BOS, a break of structure, the next thing you should wait for is a retest. So the question is, where would price retest? That's the next question you should ask yourself. Then you draw your levels that broke. So over here, we see that this level broke, right? So whenever I see something like this, next thing I do is I set my alerts as my zones. So I'll set an alert right here to see what price will do when price comes into this previous basically level of support, which would potentially turn into resistance, which would be our break of structure and retest. Okay, I hope that is clear. Yeah, so yeah, whenever you see this kind of structure before this happened, next thing is you wait for your retest. And we see here price came back to retest the zone and literally dropped, right? So that offers a very, very high risk to reward trade and a very high win rate type of trade. So that's basically how we use market structure and support and resistance to make bank from the markets. Okay, so we have lots of questions in the charts. How far do you go back to backtest? That's a good question. So personally, I have a rule that at the end of each year, I literally backtest the whole year that just ended. So for example, we're in 2024. I backtested the whole of 2023 for many pairs, for all the indices, for GJ, GU, UJ. I backtested everything. And when I'm backtesting, I have a database that I type in lots of information about what I am seeing in the markets. So you can backtest as far as you have data on, but you can backtest up to like 1 to 2 years back to see what the market structure was like. And also you need to understand that even when backtesting, you need to also factor in economical events that happen. For example, the markets were a bit different during COVID than they were last year, right? That's another thing. So you can backtest the whole of last year to see opportunities you could have taken advantage of to create more mental representation. It's very, very important for you to backtest, okay? Don't listen to people that say don't backtest. It's very important for you to backtest. Backtesting is almost like you are giving yourself like a whole year's worth of experience in one sitting for multiple charts. That's a lot, right? So please show us how to backtest. I can't show you guys like every single thing right now. I actually plan on posting more videos on YouTube on my Chart Nation YouTube channel. So subscribe. I'll be posting all these questions, support and resistance, how to backtest, supply and demand, how to keep your trading clean, stress-free, how to create your playbook, how to create your journal. I will be giving you guys all that information out for free on YouTube. I'll make it more long-form content as time goes on to give you all this information because I'm getting lots and lots of requests like this. But yeah, I will make a video because how to backtest. Backtesting is not just you going to read the markets in the past. No, you have to go into lots of details. I'll give you a list of things you need to collect. Okay, a long list of things you need to collect with every setup you identify in the market. Yeah, so subscribe to the YouTube channel, okay? Let's see more questions. Okay, you're welcome. You're welcome. I didn't see the reminder email on time. Oh, my apologies. Sorry about that. But yeah, the recording of this will be on YouTube, okay? So you can like, share, subscribe, and also share with people you think will take advantage of it. Okay, any more? Type in the chat if you have any questions, put them in the chat so I can answer them. But so far, I hope this is clear and easy to understand because honestly, this is all you need. But I will give you more, okay? I will give you more stuff. Please, do you trade prop firms? Do you trade prop firms or your own funds? And do you have any prop firms you can recommend? This is a very, very good question. I don't know the country you are in, but in my area of the world, there's a lot of stuff going down with prop firms. Yeah, there's a lot of things happening. But yes, I have been trading prop firms for quite a while now. I would say over a year. And I also trade my own funds as well, right? So I do not put all my eggs in one basket. I do not trade only one prop firm, and I do not trade on only one platform. So that means I use multiple prop firms. I have my personal account, and I also don't use only MT4, right? So I keep things diverse so that in case there's something, I have something else to fall back on. So yes, I trade prop firms and I trade my own funds. And which prop firm do you recommend? I wouldn't want to recommend any prop firm now that all this stuff is happening, if I'm being honest. But the only one that I see that is still standing tall is FTMO. After they got hit by the US regulation, the only thing that happened to them was that they stopped accepting US clients. So if you are not in the United States, I believe you can take advantage of FTMO. So that's the only one I recommend. Question in the chat. Oh, I'm beautiful. Thank you. How old am I? I'm old enough. That's all you need to know. I'm young. I'm not old, so I'm young enough, basically. Backtesting is more like following the old and new financial news. It's more like following the old. Well, backtesting is more like watching the price action that happened. And when you're backtesting, I actually noticed that on certain days, whenever there was economic data at that time, you would sometimes see it on TradingView that there was some form of economic data on that day. So that's something to also take note of. At the prop firms, the only way to make the only real only really make money a lot per trade. At the prop firms, the only way to really make a lot per trade, no. A lot of profitable traders seem to use prop firms. The reason they are using prop firms is because it's you when you're getting a prop firm account. Let's say you have $300, you can purchase a prop firm account of 100K, right? And in that 100K, you actually what you have in that 100K is about just 10K. But it's easier for you to trade that 10K amount versus trading your initial $300 out of pocket. Do you get? Prop firm is not the only way to make real money. It's just that it's a faster way. If you're trading $300, if you're going to flip the account, you're probably just going to double the account and just make it $600, and that's all. But in a prop firm, you can potentially make $10,000, which is like 10% of your account in a month, right? But yeah, that's why traders are using prop firms. I'm late. Oh, my apologies, or sorry about that. The recording will be on YouTube, so you can watch it again. A question in our YouTube chat: what books do you recommend to read on trading? the book I recommend, or the book, okay. A lot of people say Trading in the Zone, but personally, the book that's really helped me is One Good Trade by Mike Bellafiore, and also the Playbook by Mike Bellafiore as well. I hope I'm pronouncing his name properly. But yeah, One Good Trade and the Playbook. Check those out. Does it mean that the BOS should be at a support and resistance zone marked out on higher time frames for the break to be meaningful and trades taken off the retest zone to be high probability? Yes, that's what it means. Okay, so if you're looking for high probability trades, the best thing to do is to stick to the higher time frames. That's the first thing. That's the first thing, is stick to the higher time frames. Then the second thing is to identify your zones. So let's actually do a bar replay. If TradingView will have the information prior to this, prior to the downtrend happening, this zone right here would have been our level of previous resistance turned support. Where's this one? Okay, over here as well. Support on the daily time frame, right? So then if we play it and keep going, we see that, okay, price has broken the first support zone. That already tells us, okay, something is coming. And then it broke the second zone as well, right? So that's basically what I meant by break of structure. So I hope that basically answers the question. Okay. Do you trade news? If you do, how do you prepare for them? I trade news sometimes, not all the time, and just depends on the type of news. At the beginning of the week, I'm completely aware of the kind of red folder week we would have. So I'm aware that if I'm going to trade this pair, we have some news, and I know how to prepare for them. If I'm in a swing trade and there is news, and I'm trading with the trend on the daily time frame, if my trade is off of a level of a good level, so a significant swing low or swing high, I will not be closing my trade because of news. I know lots of people do that, but yeah, this may counter what you've learned. But if I'm in a swing trade on a currency pair, of course, not indices. If I'm in a swing trade on a currency pair and there's news, if my SL is at a good level and it makes sense for that trade, I will hold my trade. Okay, and it has to be in the direction of the trend on the daily time frame. I will be holding my trade until the stop loss hits. If the stop loss hits, I'll just wait for the next trade, and that's it. I don't stress about news. Okay, please explain how you trade a FVG. I know that is fair value gap. And I think that has to do with either SMC or ICT. I don't trade SMC or ICT, okay? So I'm not sure. I believe what people do is they find break of structure and then look for a retest at the fair value gap area. That's what I see on IG, but I personally don't trade that. Please, can you share more PDFs of your books, please? And Cancer Bible has really helped my mind in markets. Oh, yes, I will be sharing more. Look, over here, we're sharing everything, okay? Chat Nation is here for you. We're sharing everything you need. But yeah, if you don't have the Candlestick Bible, it is in my free Telegram. The free Telegram link is in the bio of my Instagram, ChartNationFX. So go and study that book. That literally everything I just taught here, you can read it in that book. Are there days of the week you don't trade? Some people avoid Mondays or Fridays for more stability. There are no days of the week I don't trade. If I see my setup, even if it's the middle of the night, I will execute that trade. Okay, because it depends on the type of trade, it depends on lots of things. But personally, there are no days I don't trade. Sometimes on indices, it behaves very funny on Mondays. That's why people say they don't trade on Mondays. If you backtest or review your performance and you see that you take a lot of losses on a particular day, then you should probably review that and not trade on those days. That's the psychology behind that. So don't just say you're not going to trade on Mondays because people are not trading on Mondays. No, there needs to be a reason behind it. Personally, if my trade appears at the middle of the night, I'll wake up, go and execute and go back to bed. Okay. And of course, it's going to be a swing trade. Question in the chat. Ma'am, are you Nigerian? Yes, I am Nigerian in Canada. So you are a swing trader. I swing and intraday. I swing currencies. I intraday slash scalp slash swing indices. Okay, so I have experience with all of them. So that's why yeah, it's just on a case-by-case basis. So for indices, they tend to provide lots and lots of intraday moves and scalp moves. So I take advantage of that. But when it comes to currencies, I like to swing currencies. How long did it take for me to become a profitable trader? That's a story for another day, but it took me quite a while. It took me about 2 years to figure this stuff out. But it's not because of the markets. It was all because of me and the kind of information I was learning, right? I did not invest in proper education. And believe me, I purchased lots and lots of courses. I was all over the place. I had the currency Bible for a long time. I did not even read it. I was all over the place because I was just after the money, until I just got tired of chasing the money and I started chasing the knowledge, and then the knowledge started coming. That's how it is. So better leave money alone and focus on your education. Can you place trades on any time frame? Why do traders like 15-minute time frame? You guys need to understand that when a person tells you they don't do this, they don't do that, you need to understand the psychology behind it. I personally place trades on the 15-minute time frame only on indices. If it's a currency pair, I will be waiting for a 1 hour time frame confirmation, if not 4 hour, right? So the trader that is placing trades on a 15-minute time frame, they probably have a reason why they are doing that. And you also have to have a reason. You cannot just like follow what everybody's saying. You need to go back. That's why you literally have all the data on TradingView to review. So go and review all these things and have reasons why you're taking trades, reasons why your strategy is SMC, reasons why your strategy is all those strategies, right? Even, yeah, you need to go and test, guys. You need to put in the work, okay? Please, can you explain entry model and trading edge? Trading edge is basically your advantage in the market, right? And you identify your edge by what you are good at. Okay, you identify your edge on what you're good at. Basically, your edge is basically your advantage in the market. So if you have identified that, okay, this particular strategy works well for me in this market condition, when there is news, when there is no news, that is your edge in the market. And explain your entry model. Entry model, the first thing I look for in the entry model is zones, your area of interest, such as support and resistance, supply and demand. The next thing is an indication that market is about to react off of that zone, right? That's the next thing. You need an indication the market is about to react off of that zone, and the indication is your candlestick analysis. So our next masterclass, candlestick analysis, supply and demand. Those two things, we're going to tackle them deeply, okay? And remember, supply and demand offers high risk to reward, But yeah, that's how I get my entry. Please don't forget the indices example. Yes, thank you for reminding me. So I was going to show you an example on indices, okay? Indices, let's use US 30. I cleaned off my US 30 chart. Or maybe we should use NAS 100. Okay. So I hope you guys can still see my screen. On NAS 100, prior to this week, let's bring the next one. Okay, on Friday of last week, not yesterday, this is how the market closed, right? Now, at this point, people were thinking, the market is switching bearish. It's time to sell. It's time to sell. Now, based on what I literally just taught you, you should know that, okay, this right here is potentially going to be a high probability trade because we are only testing a swing low level. Okay, so if we look at the structure that was forming, let's take this off. So prior to this, let's hold on for a minute. Prior to this range, because we were in a range, and that's one thing I forgot to mention. I will mention it. When, first of all, let me just mention, when we are in a range, right? Prior to a range, usually the market will be trending. If we start to range, you should be looking for price to test. Okay, let's say we're in an uptrend, right? Market is going up, up, up. If the market starts to range, meaning that it would identify a level of support and resistance and then support, we should be looking for price to test a level of support to continue going up when we are in an uptrend. Okay, so if we are in an uptrend and the market starts to range, identify the level of support of that range and buy off of the support. Okay, and your target should be either the high of the range or even higher than the range. And this is what happened on indices this week. So market is in an uptrend. We started to range. Identify the level of support. If price comes back to that level, look for an entry and go long. That's it. That's literally it. And this happens if you backtest your chart. This happens all the time, right? So market was in a range. We have this level here, this level here, this level here. If we go down to the 4-hour time frame, we'll see even more levels and all of that. But let's just keep it clean on this time frame. So price was in a range. However, we noticed that this was basically a swing low level that created this swing high level. That level was still being respected until the level breaks. We are not selling. We are not saying that market is reversing until that level breaks. Okay. But yeah. When market comes back to test the level, we should be looking to go long, okay? And that's literally what happened. That's literally what happened. Price literally went up. And even US 30 did something similar, and it ended up creating a new high. Okay, so this sounds so basic because it's not something fancy. People don't like, people bring their personalities into trading, and you can tell. Some people just like conspiracy stuff. They like to stress themselves. They like to have ego and things like that. And you see that in their trading. Me, I like to keep it simple. If it's not simple, you will not be seeing in the markets, point blank. Okay, so keep your stuff simple. I'll be keeping things simple and precise over here at ChartNation. But yeah, I hope that answers the question. Please, the cost of the premium class, can you reduce it? Okay. We'll look into that. Okay, so in our YouTube, we have some questions. Do you have a paid education platform? Yes, I do. I offer this free stuff monthly. I have a paid education aspect of my trading education. So it's going to be a bootcamp, right? A bootcamp / mentorship. So for about a month, it's about 21 days, you would have back-to-back class, not back-to-back, but you have classes with me, and it's going to be all live. It's not a course, so it's going to be all live where I'm going to all these things. I'm going to be going into details. I would even show you down to the 1 minute how you can get sniper entries. You see how you go on IG and you see some people's entries are like they are wizards, like they just knew. Somebody told them the market was about to reverse and they got in a tip top. Yeah, I can show you how to do that. But it needs a lot more time. Like now we are literally out of time for this masterclass. But yeah, I have an education platform where you can pay for more in-depth stuff. And after this class, we would send out the wait list, and then depending on the wait list, we'll organize the class and all of that. So yeah, that's to answer the question. Then when is the next masterclass? Next masterclass would be next month, of course. Maybe towards the end of the month, we would provide that information on our social media platforms. Any advice for us who want to add futures and indices trading to our trading pairs? Take your time. If you're going to add indices to your trading, you need to backtest. You need to identify your strategy that you're going to use to trade indices. Are you going to do intraday swing or scalping? They need to identify, what happens on each of the days. Now, one thing I would advise you on is market open. Some people, this does not really happen on currencies, but market open is at 9:30 Eastern Standard Time during the weekdays. When market open happens, there's a lot of volatility in market because that's when the stock market opens, right? And that has a lot of volatility. So just be aware of that. And also market closes, it closes twice. So it closes, I believe, at 4:15, opens back up at 4:30 and closes at 5 o'clock and then opens back at 6 o'clock. So that's what you need to know about indices. Okay, moving on. Please, can you show us your outlook on the WTI before you go? What do you mean by WTI? And the week, maybe? Okay, so yeah, so the details of the boot camp would actually be sent to your emails for everyone that attended this masterclass. So would actually send that once we're done here to okay, WTI, yeah, right, US oil. Actually, don't trade US oil, unfortunately, but yeah. What province are you located? Do you have an open workspace for private mentorship? I am located in Ontario, Toronto, and I'm actually putting something together for the summer for an in-person workshop for day trading. But yeah, details of the private mentorship / bootcamp would be sent to our emails after this masterclass. Now, one other thing with the bootcamp, one thing you would also be getting is one-on-one sessions with me, right? So you literally be getting one-on-one sessions with me in addition to everything else that would be provided. You get live sessions, you get in-depth look. Listen, we're going to decipher every single candle in this chart so that you can get into the money, okay? But yeah, that's what we're going to do in our yeah. So basically we're done for the day. So if you have any questions before we call it the day, you can put that in the chart so I can answer that before we go. I'm actually in Toronto, that would be great. Yeah, that would be great. I need more Toronto people. You guys need to start trading. Seriously. Maybe I'm not finding them, but yeah, I'm not able to. But yeah. So far so good. So any more questions before we call it a day? I hope I have been able to instill this good foundation into you. And remember, without the foundation, the building is faulty. Without the foundation, building is faulty. What we just laid down here is your foundation for your chart analysis. Okay. So today, or tomorrow, the market opens on Monday. So you better do your top-down analysis, just how I explained it. Keep in mind the daily time frame, so the long-term trend, medium-term trend, and the short-term trend, and trade accordingly. Do you trade synthetic indices as well? No, I do not trade synthetic. Yeah, so let's see any questions in the YouTube. All right, so we're going to call it a day here at this point. Thank you all so much for joining in from Ghana, Canada, US, Morocco, Barbados, all around the world. I love you guys, Chart Nation fam. But yeah, follow us on social media, ChartNationFX. I post lots and lots of helpful tips. I'm not posting the cards because I don't think that's helpful for anybody, but posting the information that you need. Okay, I'm posting the information that you need to follow for helpful tips. And also send me a DM on IG if you have any questions, and I will answer you with what you ask me for. So yeah, yes, you're welcome. My pleasure. I love talking about trading, so it's my pleasure. You're welcome. You're welcome. You're welcome. Have a lovely rest of your week and yeah, have a lovely rest of your weekend and talk to you guys soon. You see me on social media, of course. Of course. Thank you. And of course, you can rewatch this and share this on our YouTube channel as well. ChartNationFX. ChartNationFX. All right. Take care, guys.